Good afternoon, traders. This is Christian from Hertz Tropica Trade Group, and it is Monday, December 19th. Let's go over the price action of the indices first. And of course, first disclaimer in front of you, everything that we are going through in this video is for information purposes only, not giving out any advice or recommendations. SPY finished down 85 basis points. Some of these might be in the spreadsheet might be a little bit off because there were some ETFs, sector ETFs, as well as a couple of the indexes that had their dividend reported today or ex-dividend today. Usually they all do those on quadruple witching on Friday, but with SPY. But some of them didn't, so the performance is a little bit messed up because I'm just taking the one-day performance. So SPY did finish down. So that said, SPY finished down 85 basis points, almost 1%. The Qs underperformed. That was down 1.4%. IWM was also underperformed, down roughly about the same, 1.35%. So if you round, it's down 1.4% as well. And the diamonds finished a little bit better. They were green for a portion of the day, the morning, but they also finished down 0.5%. So let's go over very quickly just some levels to watch in the indices. And a couple of the themes that I see playing out. But overall, the first thing I would say is look at the breadth. Once again, this has been the situation now for more days than not over the last 2 weeks, where we're just seeing that the breadth is really looking ugly. A lot more selling pressure going on than buying pressure. And once again, we're seeing just a continuation of a bearish crossover in the McClellan Summation Index. You could use $ NYSI. That's something that we talk about over the weekend, and I put this chart out a few times. Let's see if I have it. It's not updated for today, but just to give you a visual of what I'm referring to, right? The NYSE, right? These are in bearish crossovers. So for me, it's one of the criteria that I used, whether or not I want to be a little bit more aggressive on the long side or on the short side. And right now, this has been a pretty good indicator this year for when we have a material change in momentum. And this has been telling you that we've got to change to the momentum, from this transpired a little more than a week ago regarding the bearish crossover, and that is living up to what the trend is telling you right now, because the breadth was pretty negative again today. If you want to see the raw numbers, we can bring that up. That's bonds, which we will also go over. Breadth, what is that? Is WB. If I can't think of it, I'll come back to it. I'll come back to that because I can't think of what the code is in Bloomberg. Nevertheless, right, let's look at the price action in the indices. We did break value on Friday. We were holding above 38.57.5, right? So that's further continuation to the downside. Of course, we were in this range for about 3 weeks. We've broken it. We also took out, these were a couple things coming into today that I was looking at. I knew that we had this downside VPOC that was kind of just left here on Friday, that was taken out this afternoon. And we did not hold it. So, this could rally back. It's something that, something I'll be watching again tomorrow to see if price can get back above this level, which is right around 38.50, maybe 38.52, right? And then we know that we're onto something, right? And then maybe we can see a further bounce. But for now, right, one of the things in common when you look at that 1 hour chart and the daily chart is notice that the price is below all these moving averages that I've got drawn on my charts, right? That is a case that should tell you that you've got you've got weakness in the charts. I don't, there's definitely certain levels that I like to watch and pay attention to when we get when we get close to those levels, but that doesn't mean that we're like, I'm going to be putting on a big trade just because we get there, right? It's the process of paying attention, watching, and if it doesn't hold, then nothing. And that goes for the downside as you know, for the upside as well. So we've broken through there. So again, we'll be watching this tomorrow, but you know, what I try to do in these situations is basically day trade a little bit and not do much else. In fact, you know, I came into today with just one stock swing trade on, and I took that off today in the middle of the day. So that's it. You know, I don't have much risk on. I'm paying attention to the signals that we're getting, and I basically, you know what to watch, which is if we can get back inside value, right? And then I can play a little bit more of a bounce. But for now, this is pretty darn ugly. Here's what, you know, if you want to look at the Qs rather than NASDAQ futures, but well, that's interesting. It looks like we took out a VPOC to the downside. So again, you know, this is something to kind of watch to see if we get some type of, you know, buying that comes in here, because if not, we've got a lower VPOC down here at 265, right? But again, for me, it's important to pay attention to volume at price, right? And where we could see a possible turn. This, you know, if you go back to the S&P for a minute, you know, we did get the last time that we turned. Where was it? It was on a virgin point of control takeout down here, and we moved higher from that. So, you know, right now, you know, the name of the game, if you're playing mostly to the long side, is to avoid, you know, the moves down like this, right? And again, last week was tricky with all the events, but it did resolve lower. And so for now, you know, the name of the game is to be defensive, right? Small caps, which I think we took out this on, speaking of virgin point of control, we took out this on Friday, but again, price is not stopping here. And just like the other indices, price is below all these moving averages, the 5, the 20, sorry, this is the 5, this is the 50, 20, and the 200. So what I'd like to see is for price to get back above those short-term moving averages, and we're not close to doing that. So I've got written in here just as a little bit of a, besides the spreadsheet not working for the price action, but defense wins championships. Just as a reminder, as we watched the Giants win yesterday, really nice play by their defense yesterday, and yeah, I mean, right now it's to be on the sidelines, you know, and it gets a little bit tiresome to you know, I'm in front of the screens all day long, regardless of the price action. But I was even saying like today that this was kind of dull, because I just really try to stick to my system. So here's what I did today. All right. Oracle, so we could go through a couple of these charts. One thing that stood out to me was there was a lot of put buying in individual names. You know, we've seen a lot of index put buying. And we have seen some things like Apple, we've seen puts, we've seen, you know, Tesla puts and so forth, but it just seemed like there was more of a wide variety of puts that went up today. Oracle is something that I'm watching because, again, I'm more attracted to cheap tech right now in this environment. I didn't get a chance to talk about what happened in bonds today, but rates went higher. Here's what this looks like. I do have actually, this is bonds right here, but this is looking at the yields, right? So normally when I bring up bond futures or TLT, we're looking at the price action, right? Remember that yields are inverted with the price. So this is specifically looking at where you know, where the rates increased today, pretty much across the board. The 10-year was up 10 basis points. So you had you had movement across the curve, right? Right, and here's what ZB looks like. All right, so 30-year bond futures. Again, there's no breakdown here yet, but it is coming into the 20-day moving average. So this has been going sideways now for a couple weeks. Okay, but we'll see if there's further continuation to the downside, because that was a decent move. If you want to look at TLT, that's also into the 20-day moving average. So yes, while rates are pretty high, you know, overall and across the curve, you know, I tend to look at things like Cisco, Oracle, if I'm going to be in tech, because they're cheaper. So this closed right at the top of value. I try to trade here, right? Starter, think again, really small targets. You know, so it took a target in this, and then I took this thing off once it went below my cost basis. So again, I could have kept it on to the end of the day, but that's fine. KMX was one of those names where we saw a big put buyer, right? CarMax, right? There's a lot of talk about there about a glut of used cars. This worked pretty well. Keep in mind, this name reports earnings later in the week, so you know you could get one more day, or sorry, a couple more days. I think you have, but my target was $57. It got close enough to that, so I took this short trade off. Right, sold this at $60. And took the final piece off at 57.90. All right, and that's basically it. I was looking at things like Caterpillar. I like this chart of Caterpillar. It just is one of those things that maybe keep an eye on here. It has to break 237.10. For now, it's just going back and forth inside the value area. Right. Another name that I did add to at the end of the day. Again, I don't mind owning some things like this. Right. This is Cigna. That to me looks best in breed in the managed care space. And this had a nice day. It was at 1%. Nice hammer bar on Friday. So, you know, a little bit of a dip here, you know, taking advantage of that. And that's basically it, guys. I'll keep this video pretty short for you guys. The one other thing to notice too is just, you know, things like Apple, right? You know, just looking very ugly. It broke that recent range. You know, I go back to these two charts that I've been showing quite frequently. We talk about them in the Tribeca Trade Group room, but this is the equally weighted S&P ETF, RSP, over the SPY, which is market cap weighted, and it just shows how much like the FANG names and the big you know, big tech, big growth are weighing down the overall index, because RSP is doing a bit better than that. And if you want to look at the equally weighted Qs over the Qs themselves, so again, same exact components, but just, you know, shuffling them around differently, the weighting scheme, equally weighted versus market cap weighted, and you could see how much better, right? So there is more strength in the you know, in other names besides the biggest names, right? And this is nothing new. We've been talking about this for months, but you know, the trend continues in terms of the bigger names, the FANG names are still, you know, it sounds like they are still overcrowded and still getting unwound. You know, maybe there's some tax law selling going on at the end of the year, something to that effect, but they continue to underperform everything else. And so there you have it. A couple other things that stood out today. Energy was a little bit better today, but really didn't have too much momentum. And the banks were actually up a little bit. That was your best performing group. So again, a little bit odd, but we will go over all these levels tomorrow. If things happen to kind of flip, you know, we know the levels to watch to get more aggressive, and we go from there. For now, again, defense wins championships. Guys, have a great night. See you tomorrow.